FOMC at 8 o'clock Central European time. So during the rest of the day, I think it's likely that we don't see massive moves, but what I'm mostly expecting is to chop around between these levels where we build liquidity to the downside and to the upside, and then during FOMC we're gonna take either the highs and then sell off, or we take the lows and they'll then go up. But as already said yesterday, I only want to trade clean setups and not bet on any direction, because a lot of times people expect now with FOMC a massive move either to the downside or to the upside, and they want to be in if it happens. But personally, if I don't have a setup, then I don't care. I'm fine to miss big moves. I only focus on a clean setup. Currently I don't see one, so then I just remain patient. But go back to the chart. We knew that we had the 1, 2, 3, basically model 1, or you can see it as a bearish PO3, and then we broke back in the range, retested the range highs, sold off. During the weekend, that slow grind up, retested the range high level again where we sold off last week, and then we formed on Monday that local model 2 distribution during New York with that nasty move there, which we, or at least I shorted to target all that weekend liquidity, which is basically this liquidity drill, because it looked extremely poor. And I said, even if we want to get bullish, this has to be taken. So price took it out, went a bit lower, but here I took my profits, and now you can see in hindsight, I'm glad to just realize like 6.5R, because right now it would have been eating quite a lot of my position again. So now I'm just sitting out and waiting for the new opportunity. So yesterday I mentioned that, in my opinion, I still feel like this will be a lower high for lower low. Personally, I still think that's the most likely scenario, but I would not be surprised if we show a lot of strength and then break the range high. But as long as we are below 65.5k, I think the chances are bigger, also because I'm a range trader. So for me, this is clean deviation. So until proven otherwise, I expect price to travel to the other side of the range. Happy to admit that it is not a range anymore if we break out above the range. But as long as we are in that range, I think a continuation to the range low is more likely, in which I think it makes sense to form here, anywhere here, lower high, and then go back to the lower part of the range. So mainly interested in shorts, but for now I see strength, so I'm not interested in shorting. But yesterday I mentioned that the only way I would be interested in longs was if we would sweep that naked low on Tuesday during New York hours and then reverse, because then this could still potentially be our weekly low, in which is the exact opposite scenario of last week, where we first pumped into the week, then formed our Tuesday high at New York time as well, and from there reversed lower. Right now we basically have the opposite, where we sold off early in the week, swept an important low during Tuesday New York hours, and then reversed. So could be reversal setup. Also because this is like our clean, we still need to come up with a name, but the reversal setup, where we have market structure going down. So we have low, lower high, lower low, lower high, SFP. So we do not close below our market structure low, but we swing fail it. Then the high that brought us into that low is our targeted low, and because it's our swing high is also our market structure. So right here, price broke, structure back to bullish, in which this local range, right here, can be seen as a bullish range. So this is also combining market structure again with your local range, because you can draw it like this: low, lower high, lower low. But in a downtrend, we also always pull our range from low to high. So then this is our range where we took out the range low, pushed back into the range, and then it always helps to put your deviation threshold in, because then you can see that this also was never a range breakdown. We stayed within the deviation threshold, so then it's a valid deviation. We gotta move to the other side of the range, and here we broke above the deviation threshold. And we broke, therefore, also structure back to bullish, because this is the high that bothers into this low. So by breaking that high, we have a bullish breaker structure. So that means that this local range that we had can be seen as a bullish range that broke to the upside. So then we can look for the Ramsey effect, where we can pull our volume profile from the start of the range to the level where it broke out. So in this case, that's like the second candle to the upside. And then we know that oftentimes price has a range, then the initiation, the mitigation, before the continuation. So that was what I was mentioning. As long as price holds that upper part of the local range, then it can continue bullishly. And you can see that that perfectly happened, because we had 10-minute demand right here. Delete that for now. 10-minute demand overlapping with the value area high. Any point of control of this bullish range. So if price wants to stay bullish, oftentimes it goes back for that mitigation. And this is the textbook example of a bullish Ramsey, because we tap into demand, hold value area high and point of control, and from there react. Then we basically do the same again, because we have again ranging price action. So also here you can pull a range from high to low, and then put on your deviation threshold, and you can see that you SFP it, go back in the range. Eventually this is a range, break above your deviation threshold. So this can now be seen as again a bullish range, a replica of this one. So here we can also pull a new volume profile from that high to the breakout right here, and then we see that we again have the value area high right here, any point of control aligning with some demand levels. What was it? Not 15, yeah, like 10-minute demand, this one, overlapping with that point of control and value area high. So you could watch for price to come back into here, mitigate it again, break structure back to bullish, and then basically continue your uptrend locally, because we had here the bullish break. So now we have basically high, higher low, higher high. This could simply be a higher low for a higher high. So the reaction here is going to be pretty key, because bulls technically want to get a reaction from this level. If they don't get it, then you also have like not too much to fall back on. That's also why I drew that trend line. Trend lines are very subjectical, so you cannot draw them everywhere, but sometimes you can use them. In this case, I like to use it, because then you see the confluence of the tap right here, the tap right here, and this trend line now also aligns with the retest of your bullish range demand. So either you react from there and continue the uptrend, or if you fall below it, then I would not be surprised to see a rotation back to the lows again. Also because we are now in our bearish lower high territory, which is here. This is the 7278. So that is the optimal level to put in a lower high for our bearish trend. But overall we already mitigated a pretty big supply zone, because here we have low, lower high, aggressive break. So technically this whole zone right here is a range supply. You can see the price already clearly moved into that. So it can already react from here. So pretty interesting levels. And especially because we have FOMC coming up. If we look at the local bullish structure, then it is technically right here, high, higher low, higher high. So this could be higher low for higher high. But here we also have some structure. So it is 15 minutes, not 30. So right now price is already going to test this red line, which means that if price breaks below it, then you have a 50-minute bearish break of structure, which is your first warning sign. And then I think you really need to hold here, because falling below it, then I'm going to be pretty interested in shorts if we do not react from the top of this demand. If we do react from the top of that demand and push back above it, then I'm gonna look how price reacts here, and maybe could even give a long setup. But as said, I'm only gonna take trades if they are super clean and I can quickly de-risk. So this is a level where if we tap into it, break structure back to bullish, I could take a long, for example here, and my stop loss is then here. And then if we start to move higher, I'm gonna move my stop to break even, because here I think this is also an inflection point where it doesn't make too much sense to fall below it. So I think if we fall below it, that a lower high for a lower low is more likely. But I'm planning to stay flat, or it needs to be super clean. Because I also know my win rate on FOMC or CPI things, it's not good. So until it is super clean, I'm just gonna watch it. But I think bulls want to put in that higher low in this region. If they do that, this is the next big hurdle for them. And this is where we have the true inflection point, because that is where either the bears are gonna step in to create the lower high, or bulls manage to break above, and then the Pier 3 is basically invalidated, because then we reclaim the range high, and then it's likely that we get a rotation towards all this liquidity. So pretty interesting playbook, where it's worth setting some alerts there and a bit higher. Yeah, so that I think pretty clean levels to work with. But as I said, I would not be surprised if we now chop, because we basically have the inflection point for the bulls is to hold this area, and the bears is basically this area. So with FOMC later today, I would not be surprised if they hold it in between those levels, and therefore create liquidity to the upside and to the downside. And then during FOMC we get the probably the first fake move and then the real move. So let's see how that's going to behave. Quickly looking at the order flow, we technically, let's see. Yeah, so we have a naked daily point of control above us, 65k. It's probably the breakdown. Yeah, so that's the breakdown from Monday, where we have this supply and then daily point of control. So this is for the bears a big PY. And on the downside we also have one, which is right here from Tuesday, so from yesterday, sitting around 63.4. Yeah, so that's around here. Here with there's this little demand zone. So basically this is what I'm watching. Hold this, you can make it a bit bigger. But hold here, and if we do not hold it, then if we break below it and fail to reclaim it, then I'm pretty interested in shorts, because then this could already be the high. But let's see. Then quickly reflecting that on USDT, because this one is also still teasing us with the two main scenarios, which is either that we continue this bearish draw. It's like low, lower high, lower low, lower high, lower low. So from the downtrend, we now have our swing high and our swing low. And basically everything within the swing high and the swing low is internal price action. So we know that we either need to make a new low or we need to take out that high to make a new swing point of this downtrend. However, price can go all the way up towards that former high, even SFP it, and then still put in a lower high. And if we see what they did, is that they came almost to the, like they came to the extreme and then sold off. So we did not close above it. So this could technically still be the lower high for the lower low, where we eventually take out the range low. But we also have this bullish scenario where we have tap 1, tap 2, tap 3, like a bullish 3 drive. We broke structure back to bullish right here, and there we have like our high, higher low, higher high, and this could be the higher low for the higher high. So we are still stuck in between the two scenarios, where either this is now the high and we continue the main bearish trend, or this local bullish uptrend is going to take over. Here we need super clean model 2 accumulation, pushing price back up, and right now price is in this demand. This demand is the key level to watch, because this is where price should form a higher low if it wants to continue, and it's also the only level of demand to hold it up. If this demand fails, then the uptrend is broken, and then it's very likely the bearish trend continues, in which this was just a deep pullback before lower. So also here, super interesting level, and then we can watch, because locally we are in an uptrend, and this is your demand POI, where price now tapped into, basically it's this whole zone. Now we have to take into account that we had this model 2 accumulation here. So they stepped in, basically also turning this into a bullish range, broke above it, retested it, broke above it.
Hier zijn overeenkomsten voor turn into.
Where price left this super clean demand behind. Strong demand, because you can see that this demand creates this strong expansion with big imbalances. So then this is your strong demand, and price is now tapping into it. So then you can watch what is my internal bearish structure, because that is the one that you want to break to bullish. Do we have hourly structure? No, we do have 45. So then we can watch with low. Let's see. Yeah, okay, so we have low, lower high, lower low. That is our 45-minute internal bearish structure. So that means that you need to break this high, then you have a bullish bulls, and then it's very likely that you go back to that high and then continue your uptrend. So this is our 45-minute, and we can also narrow it down a bit more, because here I can also see structure, and it's like 15-minute structure. So then we have low, basically this is the same, low, lower high, lower low, lower high, lower low. So then this is like your internal structure, which is less significant as this one, because that's a higher time frame and cleaner structure. But you can start at your local, because if you break this one to bullish, then it is likely that you're gonna test this one, and then you can watch the reaction there. But if you break this one, then you get that rotation back to that one. So very clean levels to work with. You can watch if bulls manage to break a 50-minute candle above this level. Current 50-minute candle is like 15 seconds. So far it looks more like it's an SFP, so failed break, which could cause a move back to the lows, but it can also just stay here, wait, and that the next candle is gonna break. So that's what you can watch. But yeah, from a local bullish standpoint, this is where you expect your higher low, and then you can go to the lower time frames to start looking at your local structure. And right now it's breaking back to bullish. The technical candle here on the 15 is like a tiny candle close. So I would not say this is a super confident breaker structure, but it's also not a clean SFP, because we have a candle body close above it. So then the next candle will determine the direction. But so far, if it can push above here, then you have a 50-minute bullish break, in which this is the next level to look. That is our more important internal bearish structure. If that breaks, then it's likely that we push into new highs, in my opinion. So very interesting levels to watch, and especially keeping in mind that it's FOMC. Okay, so pretty deep analysis on both Bitcoin and USDT, but I think they are by far the leaders. So that's why I, especially during news events like today, everything will follow Bitcoin. So that's always needs to be your main focus, your main bias, and only after that you can start looking at other alts. But I don't have much interesting things to say, because we are still at the same location of yesterday, where I said, like yesterday was here, that either price had to hold here for a longer time, and then it can be the second tap, but it's basically still the same situation. It still needs more time to hold here, and then we have to see how the reaction is from this supply. Do we maybe tap it and then sell off? That is obviously bearish, because then we just have a low, lower high, lower low, lower high, lower low. For the bullish scenario, I would like to see like a lot of strength, and then a slow pullback, and then a bullish break, and then we can play it from an accumulation perspective. Then it's clean. But for now, I would not say this is already a confirmed move, because this move down is super aggressive and we don't have any structure to break back to bullish here, because technically this is our market high right now. So this will fully depend on Bitcoin as well, because if Bitcoin is going to go down from here, then this range will be lost. Then we can delete the range. Hype, is in extreme demand PY, but internally way too bearish to make me interested in it already, because we have low, lower low, lower high, lower low, lower high, strong move down. So this is our market structure high. So that's what we need to break to get bullish again. And we also did not take the low. So I will not be surprised to see price rotating in between here, maybe take the low, and then this local downtrend is where my interest is. But right here, I think this can just chop around. So not of my interest. And Tao is basically the same situation. We have a tap 1, we have a tap 2, we have a tap 3. But if we zoom out, then you can see that our market structure is technically internally bearish, with the low, lower high, lower low. So this could be a lower high for a lower low. And that is why it is always so key to look how do you come into your tap 2. Do you get structure in your tap 2, as you did here? And how do you get into your tap 3? Because a slow move, or at least structure into your tap 3, and then a break, that's your confirmation that your low is in, or at least that you have a protected Wyckoff low, and then you can look for the higher low for the higher high. And because we currently, like, if you start zooming in, you will find some structure in here, but then you start zooming in to find it. I can already see by this move that this is just, for me, this is just one move down. So then we did not break structure back to bullish, in which this is not a confirmed Wyckoff low. So then I'm not fully confident that this is our low and that I want to long it. So here I simply want to see, can we get a move back into this demand, then get a bullish reaction, and then I will maybe try a kind of model 1 into model 2 long. But it needs to develop very nicely for that, because this move was so aggressive. Oftentimes you can also get an aggressive move back up, but technically this can just be a lower high and a supply mitigation before trend continuation. So could be interesting, but all depends on how we move down, if it's going to be long or not. Last one, ETH. Also stuck between the 1, the 2 and the 3 drive. Break back into the range. So this could be just a simple bearish retest of your supply and range high and value area high before lower. That is like the range scenario, similar to Bitcoin. Or for the bullish idea, this could be, if we zoom out, just a uptrend where we have high, higher low, higher high, higher low, higher high, and that this was the higher low for the higher high. So pick your team, but yeah, very similar to Bitcoin. Just made a low, then yesterday we swept the low, broke structure back to bullish, retested the range high, and right now it's struggling here to do any meaningful. So also here, for me, it is just a guess. Do we break down or break up? If I would long, the only stop loss I could think of is that low of yesterday, but then this is not my type of trading, as you guys know, so then I'm just not gonna trade it. And for the short, the only stop I would trust is like at least that high, but that's also not how I want to trade. So personally, I'm just gonna observe and maybe can watch like this local range. Do we get something there? Do we later on maybe see a clean tap into this supply and then a rejection, then that would make me more interested in potential short, because then I will use that invalidation, and then the RR is already much better, because then if you go here you already have like the 3R. So for me it's just a waiting game, and mostly interested in Bitcoin. I think the others will just follow Bitcoin whatever way. So I think plans are pretty clean. So then I want to go over H-bar quickly to see what's going on. Okay, good. Little alert, because I'm going to take some profits to make it risk free if we tap the value area low. But I want to quickly go over it because I haven't looked at it that deep. But when was it that we looked at the potential accumulation? I think it was here. But then I already said, like, do you want to or expect an accumulation there if you have not reached your range low demand, which was basically this range. So then there was like a potential local accumulation right here, which by the way got confirmed. But then I already said, like, it's weird to form an accumulation basically in the middle of nowhere if you have such a clean Wyckoff accumulation at the lows. So it's much more likely that price eventually wants to retest that level and then potentially move away from it. And it's also what happened. So the local model got confirmed, but it never played out. So that also shows why context is super important. Because on the low time frame you can get a confirmed model, but if it doesn't make sense to accumulate there, then they often do not work out. So context is super important. But today I saw that message of Daniel. So I was looking, okay, we are now moving into that former Model 2 accumulation range. Right here, where basically this was our 1, 2, 3 bullish break, bam. And now we come back, tapping into that level, but already losing this demand. So here's a lot of liquidity. But what mostly just got my eyes was that we were trending down, so low, lower, high, lower, low, lower, high, lower, low, and that we had this structure. So just watching the downtrend, we have low, lower, high, lower, low, and from here we have some sort of sideways price action. So very technical. This is your start of your range low, because we are trending down, you pull from low to high. Then you go to tap 2. It is within your deviation threshold, so you can call that tap 2. Same is for the other one, because here we take the high again, wicked within a deviation threshold to come back. So that is your valid tap 2 at the highs. Then technically you can extend it to the tap 2, and then we make another sweep. So this directly caught my eyes, like, hey, this 1, 2, 3 drive. That could be your sign of a distribution. But what you want as confirmation always is a structure confirmation after your tap 3. So right here we even have 15-minute structure, but I was looking at it from, I think, the 5, where I saw just super clean high, higher low, higher high. So this is the low that brought you into that high. So if you break that back to bearish, then you have a confirmed third tap of your Wyckoff, which means that this is a super clean invalidation to use, because if the Wyckoff is going to play out, that high should be protected. So then it's interesting from a short perspective, because you have a invalidation where you can trust them. So after that we saw the price came back up. Let's see, did we had some supply? Okay, so this is our extreme supply, I see, and that was just front ran. But like extreme demand, extreme supply, you have to take into account that it are just terms people have made up to make it like very mechanical. But it doesn't have to go exactly to your extreme demand. It's just the zone in general. So right here, this is your extreme supply. But it doesn't need to happen. Doesn't have to tap that in order to be bearish. And that's why I like the Model 1 a lot, because then this is already your protected high. So that is your clean invalidation. And then locally price here tapped into this local supply, and we probably have even more. Yeah, it was this last 3-minute block where price wicked into right there. But personally, I also drew the fib from high to low, and then your fib, and then you can see the confluence of that local supply and your 0.786. So oftentimes if you have a bearish break, then you can see a lower high form, but oftentimes if it's truly bearish, then your lower high doesn't form above your 786. So in this case you can already kind of think like, we have a confirmed third tap. Am I gonna wait for the extreme supply right here, which would mean that you get like a super deep move back up before reversing? Or do I trust that this is already a clean invalidation and that here you have a move into supply, strong sell-off, internal bearish break of your local uptrend? So here you have high, higher low, higher high, higher low, higher high, big wick, so that is a sign that sellers step in. And here you break it back to bearish, which technically on the low time frame confirms this as your market structure high. So that if you are bearish, you should not get back above that level. So I was looking at it, and to me this was like worth a shot, because we have here also quite some liquidity build up with this low, this low, this low, this low, this low, and that low at that time. So quite a lot of liquidity being built up, and we have a confirmed third tap, a retrace here where clearly bears step in with that big wick, and also a lot of volume, as you can see right here. So that's clearly a sign that if the market makers want to push it down, they stepped here in to avoid that move higher. And right now price also below daily VWAP. So I think this is like a clean trade. So let's see where it is. Yeah. So right now this is the trade, and I'm looking to take out a good part around here. Probably a little bit before the value area low, I think here at this wick, because then most local liquidity is taken. And that is around a 3.3R. So that's a level where I'm going to take profits. Maybe risk free and then letting the rest run to likely, let's see, do we have some demand at the lows? Yeah, so we have 30-minute demand right here, not 15, not 10, 5, also not really. Yeah, so then I think profits here and probably profits at this low. So here I see more demand. probably profits there and there. Yeah, so that's the plan. But yeah, now you see the teamwork, because I don't watch these charts, but just send these charts in and I can very quickly see if it's like a high probability or low probability one, and then we can just benefit from those trades. Let's see. Welcome, Abby. Better late than never. Interesting to see your perspective of drawing the range. Need to keep that in mind. I started drawing the range from the swing low, so for me it would have been a potential model 2 distribution. Let's see. You drew it from this one. Yeah, so then you have step 1, 2, and then model 2. Yeah. Yeah, also, it's not a wrong way of thinking. But to me, like here, I see it more like still market structure, like lower high, lower low. Because this distance between here and here is pretty big. And this one, with this one, this to me looks more like a small deviation before reclaiming back. So to me this is the start of the like range, while to me this doesn't make like a lot of sense, because this is more market structure to me, and here it's like truly a sweep and then back. So this is where I personally start my range. Step 1, 2, deviation, model 1. But that you will also notice quite a lot is that eventually it comes down to the same, because now it's a model 1 into a model 2, but if you draw it from here, then it's like a model 2. But both come to the same conclusion, that this is your Wyckoff invalidation. So that's super clean. You're welcome, Hanu boy. Yeah, I know. It's like if you watch, that's often with trading. If someone else shares a chart like this and you take it over, then you don't learn a lot of it. But if people, for example, look at this trade themselves and then I go over it, then you can see what the differences are and stuff like that, and then you can decide if you want to learn from it or not. But then in my opinion, it's very, very helpful indeed. So you can do that more often. If you want to let me look at like a trade or something, just let me know. Ask if your thinking is right, or if you want to draw your range from here to here. I'm here to explain that. Thanks, Arnold. You guys started with some pressure. What was it? Teach us, master. So I had to do it. Kijos, also for the 2 candle rule for the range, the way you drew it works perfectly. Yeah, indeed. So it's a bit personal, but it technically comes down to the same conclusion. But that's also why, like right now I draw it from here to here. So my technical target technically would be the range low, so right here. However, right now you see that I mark out my first TP as here and the second one here. I'm not even gonna let something to run to here. And that is also because I also see like the way that Daniel drew it, then this is your range. And then your technical target of this local range is this range low. So that is where my first big TP is going to be. So yeah, I think that eventually comes down to also experience, but I kind of unconsciously saw that this can also be that range, and that is why I'm gonna take profits there. But technically this is the start of my range, so it can go lower. But then you can be stubborn and say, okay, my range low is this, so I'm only gonna take profits there. But then I think that's not the right way, because I could see price take out this liquidity level and then potentially reverse. And then maybe even take out this supply to go over into a extended model 2 before going down. But then if you did not take any profits, then you round trip your position, get stopped out, get emotional, and then you're fucked. Okay, Bitcoin now at that 15-minute market structure level. So interesting. Super interesting in-depth trade analysis. Thank you. You're welcome. Super just much master teaches well. Get emo. Yeah, I talk from experience, guys. You should keep emotions out of it, which is the hardest thing, because trading taps into the deepest of your emotions. Well, I get too many compliments now, so I think it's time to end the stream. As I said, I would not be surprised if we just range between these levels the rest of the day and then get a move later during FOMC. Don't try to read too much X, because you're gonna feel FOMO, because there will be a massive move. It could happen, but all you eventually should ask yourself is there a setup, and do I have a clean invalidation? If you don't have a clean invalidation, then the market can pump massively. It can also dump massively, but if you don't have a clean invalidation, it doesn't mean anything. Because you have people that are gonna say, oh, it bounced here and I'm long, but if you buy here and your stop loss is this low and Bitcoin goes to a new weekly highs, then you don't even have a 1 hour gain. So then you can feel like, oh shit, I missed out on the pump, but all that matters eventually is what is your RR trade. Okay, you can get like a 3 hour, that's nice, but it's better to wait for like a 3 hour or 4 hour instead of trying to get a big push. A big push doesn't mean anything. All that matters is eventually how many risk to reward do you take home. So yeah, don't get too emotional, just wait for clean setups. And then tomorrow we have another day without news. I often like it better if we don't have massive news events, because then the chart truly rules. But I believe tomorrow we also have drop numbers or anything, but that's way less important. For now, thanks everyone for tuning in, and yeah, all the rest of me is to say thanks for joining once again, and happy clicking, especially during FOMC, and I'm probably gonna watch it to see that new Kevin Warsh stuff. Okay, cheers guys, and thanks.